Welcome back to Stocklabs, everyone, for another market recap. We're into June now, so summer is here. Everyone's on vacation, off and on. Fund managers in the Hamptons, so kind of a quiet week for the markets overall. We've been saying that kind of this period is almost a do nothing period. Whatever's been working for the year so far tends to keep working and nothing too wild happens. So this week we had again the small caps led for the second week in a row, up 1.62%. S&P was up almost 0.5%. The Dow was up 40 basis points, and the Qs were flat, down 7 basis points. So after kind of a really, I guess, torrid pace that the Qs had been on the last couple of months, in the last 2 weeks at least, the Russell has been the one that kind of picked up the slack. Maybe people looked around and they said, okay, it's wild how much the Qs have outperformed, so we've got to start rotating into some of these other areas of the market just so, you know, we spread the risk around a little bit. But NASDAQ's still holding up, basically near its highs for the year, and even going back further than that. At least 1 year highs, I think. But yeah, so market's holding up pretty well. Crude oil down 2%. So we've kind of been pointing this out, that anytime crude basically bounces in 1 week, the next week it's back down. So this trade is zero momentum at all. And maybe there's a bit of a range you can trade, but for the most part, it's not attracting any steady money. Doesn't seem like. Okay, if we look at our leadership stocks, because these are the ones that really sort of took over the market in the last couple months, they actually, okay, Tesla was up 14% this week, which who knows? I think this is the second week in a row that Tesla really blasted off, in a similar fashion. Netflix also up 5%, Apple flat, the rest were all down. So maybe you're seeing some fatigue over here, although kind of like I just mentioned a minute ago, maybe it's just a little bit of light profit taking to make some room for some of these other Russell type names, non-tech type areas of the market. So we'll see. But this has cooled off, and presumably everyone, especially on the retail side, is jam packed in these names, because for several months it's the only ones that worked. So we'll keep an eye on these. But as long as you have at least one or two of them blasting off like this, I mean, the NASDAQ overall can kind of hold up just because of the size of these companies. Okay, Netflix is not that big, and Meta is kind of regaining its, a lot of its lost market cap, but um, you know, Apple is enormous, Microsoft is enormous, even Nvidia is now a trillion-dollar company. So new times. If we check out breadth from an industry perspective for the week, okay, if I can click, it was actually pretty decent. Kind of just your average green week. Industrials led the way, up 2.6%. Healthcare was the laggard, flat. Even basic materials were kind of upish, 1%, even with crude down 2%. Gold was up 0.5% or something. Financials doing okay. Probably one of these situations that no news is good news. So as long as no more regionals blow up, probably you see these kind of. I mean, they've regained their footing, but maybe you just see them kind of drift with the market. Consumer up 1%. Tech kind of iffy, although it's better than Nasdaq. So median tech stock up 0.5%, 0.6. Nasdaq was flat. So tech, it's okay. Services up 1.3 and utilities up 1.6. So I mean, I don't know what's going on with utilities, but this seems to suggest a little bit of a risk-off stance for the week, even though overall wasn't anything crazy looking at least at the index level. Subsector wise, we've got okay, there's like some real economy type stocks, department stores, rec vehicles, home stores, even movie theaters. Part of the plus 5% group. And then not much after that. Again, you see these sort of regionals, these regional bank sectors sort of hanging in there, attracting some investment. And semiconductors, I only see one on here. I think a couple weeks back or a week or so back, we had just about every semiconductor sector on here near the top, bubbling up to the top of this list. And on the downside, we don't have too much. Actually, not a single subsector was down 5%. So even though the indices didn't really go anywhere as far as NASDAQ and S&P go, you can kind of say that they were in a bit of a holding pattern or consolidation period. It's not like stuff under the surface was really falling apart. So we'll see. I mean, we have perennial losers on here, but they're not down that much. Cannabis is always down. Gold and silver, when they're hot, and when they're not, they're not. So this week was a soft week for them. Other than that, not a whole lot. Everything sort of, you see these losses even on the red side of the ledger are not that significant at all. So can look at breadth from a market cap perspective, and 1 to 5 billion. Let me see here. Okay, Okay, 1 to 5 billion was up 1.9%. It's pretty solid performance, even a little better than the Russell. 5 to 10 billion, up 1.96%, more or less the same. 10 to 50 billion was 1.13% to the upside. So pretty good. Mega caps, 50 to 100 billion, up 0.6. Okay, mostly in line with the S&P. And Terracaps, 100 billion plus, up 0.9. So slightly better than the S&P, definitely better than the Nasdaq. But yeah, I would say breadth overall, whether you look at industries or market cap slices of the market, you can't really make any complaints about it. So that part is good. As far as intelligence goes for this week, we've got bearish China. So Yang is on here, top pick. And we've got Fang D, inverse Fang. Okay, this could be something to pay attention to. Stocklabs is looking for like 4 or 5% gain in this, this would probably equate to something like maybe 1.5%, 2% loss in the Qs over the course of the week. We'll see. Oil D is the inverse oil ETF, so bearish oil. This is also an oil ETF, bearish oil, and Chile, which nobody trades, so nobody cares. On the downside, if I flip this around, VIX bearish, as has been the case for many weeks, many weeks now, almost in a row. I think there were a couple weeks where this wasn't explicitly on this list, but more or less most of the weeks this year, or at least since maybe February or March, this has been bearish VIX. Utilities bearish for this week, so we highlighted utilities. They were second biggest performer on the upside. The industry page, Stocklabs thinks they're going to mean revert this week, and I don't know what this RCG is. Natty gas bearish, as always, another perennial loser. Retail bearish, and what is this? C-Web, China internet bearish. Kind of matches up with the Yang pick from earlier. So that's basically it. I would think for this week, maybe you see another sort of consolidation type week, a lot of rotation back and forth between NASDAQ and Russell. Doesn't look like investors are willing to dump risk, so they're just kind of shifting back and forth one to the other in the meantime. One thing that we can highlight is actually on the 7th, we did get an overbought signal on the market on 6-month basis and actually 12-month basis. So you'll see that this last time this hit was right at the end of January this year. So it's been a while. Now this part in here, the market was coming off of some really low levels. We'll see if the same sort of thing plays out. I mean, I think we still dipped after this in February a little bit before the market jumped back up again. So we have a live overbought signal right now. I mean, the pattern so far seems mostly like the market chops around or churns around or dips in the first half of the week and then basically blasts off Thursday, Friday. I don't know, maybe it seems like I don't know if it's option expiry type stuff, bears can't hold their shorts or something over the weekend, but well, we can check it, right? So seasonality, let me go to seasonality on the Qs. Daily, and what year is it? 2023. So if we go from the start of the year, yeah, this is the pattern, right? Basically the flat Monday to Wednesday, and then all the performance comes on Thursday, Friday. Even if I ratchet this into like a closer time frame, it's the same thing. Yeah, it's the same thing all year. Thursday, Friday, and even more recent, let's just go from May. It's the same thing. So all year is the same pattern. Basically, the market does nothing. And by market, I'm talking about the Qs here because this is where all of the sort of action has been, with the exception of the last couple of weeks. But more or less, the Qs churn Monday to Wednesday and then just go straight up on Thursday, Friday. So you're looking at, I mean, especially on Thursday, it's like 80%. Well, this is May, but let's go back for the year. Okay, it's like 70% win rate you just go long Wednesday into Thursday and you win basically. I mean, you're not going to find 70% win rates in a lot of places, but you are here in the queues. So Thursday, Friday, this is the trade for now. Yeah, so I think probably market looks okay. I would watch out a little bit for the Fang D trade, especially with the overbought signal in the market. I mean, may have to stomach a little bit of an actual dip in the immediate future, but for the most part, I think everything's fine. You can basically buy the dip, pick whatever level you feel comfortable at, and just manage it from there. So, yeah, that's all from me. Hope you guys have a good week. Hope you're enjoying the summer, and be back next week to chop it up again. Talk to you later. Bye.